Okay, welcome back, guys. These videos are going to get more and more interesting as we go along, specifically as we start talking about how to enter a trade and where to enter a trade, and of course where to put your stops, which is probably the most important one of all. So we're going to have a look at that now today. We're looking at a US yen, and this is a bullish butterfly pattern that has started to be formed, but you can see here we have a fairly large PRZ. So this could come down quite further. Now, one thing that you might have noticed is that in this PRZ, we have already had a candle outside of it. Okay, so entering now would just decrease your probability, and for newer traders, you probably wouldn't want to take this trade or for anyone, I don't know why you would want to accept that risk. I mean, there's so many other patterns that you could potentially have traded. I don't think now would be a good time to trade this, okay? What you might see is you might see another harmonic pattern. This is on a 1 hour chart on a 15-minute form later on, and that might be something worthwhile looking at. Okay, so what we're going to do today in this lesson is talk about the PRZ zone, okay? And this is going to give you guys a good look at how it's constructed, when to take a trade and when not to take the trade. So right now I'm going to tell you right off the bat that this PRZ zone is pretty big, so you wouldn't want to be doing what's typical. What's typical is when looking at stop points, which is the first thing that you want to look at when you get a pattern, is your stop point is going to be outside of this PRZ zone, meaning that the pattern would have to become invalid before you would even want to consider a stop. Okay, so right now this pattern would be invalid if it went down all the way to the bottom here. If we were to enter this trade at the top, we're looking at almost about this is almost about 170 odd pips of a PRZ, which is way too much risk to be accepting, so we wouldn't want to take the trade at the very top. Okay, so this PRZ zone is made up of different fib extensions and whatnot, as well as fibs along the time sequence of using fibs as well. If you guys haven't used a fib time sequence tool in your platform, which probably is there, it should be one that you can look at, and we'll probably do a video on that later on. But essentially we have fib clusters coming down the middle here, and this is why the PRZ is given a width or a divergence of the middle fib. Okay, so this is the area that we're looking at to be trading, and on this specific trade the width of the PRZ isn't that big and price is already outside of it, so probability decreases, and that's not something that we would want to take a trade on. However, if this PRZ was wider, we would have to be able to come up with some sort of trade plan on what we wanted to do. Each one of these blue and yellow lines would be another fib extension that could be reached. Okay, so this is going to be important levels, as well as the ones down here. Okay, you can see that in this specific one we have 5 that kind of line up inside this PRZ zone, which is great, tells us a lot. However, we can't really play this PRZ the way it is currently with 170 pips of room. So you'd have to make a decision here. You'd have to look at the B point, which is right here, and you would have to decide, okay, for me to gain about, let's just say it is roughly 100 pips from the top to the B point, and it's 170 pips from the bottom. So in the previous video we did the whole risk versus reward thing. You can find out exactly, to make it a 1 to 2 risk versus reward, you can find out exactly where in here you should put your entry point, okay, to make it worthwhile. Now at the very bottom, of course, we'd have our stop, but you can do it one or two ways. You can play this kind of fib cluster that we have right here and wait for price to kind of drop in and put your stop just outside of it, and then if that fails, you could always try another attempt further down into the PRZ. Of course, remember that the PRZ down at the bottom, the lower we go, the more probability decreases. And it's not to say that we couldn't see price come in the middle here and reverse and keep going. So it's kind of tricky playing these PRZs with larger time frames. However, that box will tell us a lot. Like for instance, on this trade, I wouldn't want to take this because one, price has gone outside the PRZ, and two, it's 170 pips that we could fall potentially and still remain in a valid bullish butterfly pattern. So none of that's good at all. We're looking also at a hard drive down if we were to expect one, and then a reverse, which we haven't yet seen, and with time passing, that's not something that we're interested in right now either. Okay, so that tells you a little bit about the PRZ, about the convergence of fib levels, as well as how you can go about playing multiple fib levels with a big PRZ. Okay, so once again, your stop point's always going to want to be outside of this PRZ, and we're going to have another lesson later on stops. And your entry point is going to be at, you can take it anywhere in this yellow box. Okay, however, being so big, you'll want to be conservative of how you do that, with your risk versus reward being at this B point right here. Okay, so those are some of the things you want to be careful of when looking at this PRZ. So in order to decide when to take an entry point, that's going to be done in another video. I just wanted to highlight here for you what the width and the length comes from, which is fib extensions and of course the time fibs with a little divergence between there. And as well as how you would go about reading these lines and how you might play them. Okay, so a lot of people aren't really aware of them and what they mean, and just like anything else, like as I said before, a price could come down inside this middle zone and it might not even touch one of these. You got to remember that the Forex is not exact, okay? Not everything is to the T. So this is something that could very well happen. Price could come down here and then bounce back up. When you play patterns like these and you have bigger PRZ zones, you might want to look back at your chart of where you have support, because then you can always play support alongside of the pattern. Okay, and we're going to get into little entry rules and whatnot, what you can look at to decide to take a good pattern. That's going to be done in the future, but right now I want you guys to understand that this PRZ zone is very important. If price drops outside of it, probability decreases. If price comes all the way down to the bottom of it, again, probability will decrease as it comes down. So you want to take your trades based on probability, and that doesn't mean taking it right at the front, okay? Because then you don't have a good risk versus reward. You always want to have a logical place to put your stop, and you're always going to want to have an entry point that makes sense, okay? If you don't have that, you want to move on right away. You don't want to take that trade. So again, this is the PRZ, and you guys now know or should know about it and how it's made up and what these different lines mean.